Good morning to all the students and the participants. We have it's a known speaker and well-known person in the GST side, and he is the senior most professional in this line, and he is a known person to us because he's taking a third time this Zoom meeting, and he has got so much of interest for our students. He has been encouraging us, sir, I am there for your student community. That's a sort of a great opportunity for all of you to avail his services and advice. Okay, now I wanted to just speak few words about our speaker, Sri MVL Narasimha Garu, the proprietor of Maths SSRK Consultants, is one of the leading financial and tax legal advisory and consultancy organization in Hyderabad. And he's a well qualified person. You know his qualifications, and he's MCom, MBA, LLB, and he is offering various services. Those deal with GST and companies, LLP, farm, IEC, MSME, and various levels. He has been rendering the services. I don't want to go into deep because it was already explained. And with this, sir, brief info.
Yes, sir.
We are requesting the speaker to start the program.
Right. Thank you very much for.
Thanks.
No need to tell every time, sir. We can directly we can go to that. This is only for this subject matter, no?
Yes. Thank you. Thank you.
Thank you, sir. So can I start, sir, now?
Yes. Please start. Please start.
Yes. Good morning, friends and students. And today our topic is refund. So GST on refund. So refund is it was very hard. I want to say this is one of the best subject in GST. And the chapter itself, refund, to claim the refund ITC. So first, before going to the refund, we are going to the how it is come the refund and what basis we get the refund. So before that, what we could just a little bit explain the ITC. So before why it is coming the refund allows on the internet before then we go for ITC. So ITC is the main important of the to claim the refund. So when, where, and we get the ITC. Generally, if you go for any businessman, you procure some material from the inwards. So for that, in that inwards, we have to claim that whatever inputs are it coming, that we have to claim ITC, input tax credit, that is. So just I give a small test of this input tax credit. Every registered person is entitled to the credit of input tax charged on supply of goods and services. This is a very, very important. Before going the refund, I'm explaining the ITC. So how used for intent to be used in the course of the business. The ITC, once if we want to claim the ITC, that's if we want to do the furtherance of business. See, if you are going for the, if you want to do the business to take any inputs or input services. So if we have any furtherance of business only, we are eligible for ITC. That is very, very important for this ITC class. So second one, it comes to registered person shall not be entitled to take the credit any input in respect of supply of goods and services, but unless satisfy the conditions of the section 6. That I will explain the section 16 to have a beautiful slides of this. I will with the question answers also is there in input. Just I go for briefly in this bullets like that. No input tax credit is allowable in respect of the supply of goods in section 17.5. What is 17.5? Again, I will explain that 17.5 also. Input tax credit would be availed in registered person, including the input services distributed basis of invoice, debit note. And so major, it's a main document of this to claim the ITC. the main document is invoice. The invoice and other conditions also there, that will explain. Next, coming to the input tax credit, respect of any invoice, debit note in supply of the services will not be allowed the 30th November. So this 30th November, it's a last date of the next previous financial last date to claim or any adjustments of the 30th November. Where the registered person who is availed the input tax credit on the inward supply of the goods and both and fails to pay the suppliers. This is also very important clause, 180 days clause. These are also is there in slide number 22. I go for that slide number 22 for very easy for you. So generally input tax is coming to the section 16 to 21 or containing to section 16 to 21. I go for this. It's actually slides are this is very, very important. So first, before going to refund, why it is ITC, why we have to discuss about the ITC. So without ITC, we cannot claim the refund, right? So what is input tax credit is in GST. So in GST is the paid by the taxpayer when the makes the purchase of goods and avails the services and utilize the such a tax lower its GST obligations. It sells the some goods to provide the certain services. See, for example, I give Mr. A has purchased the goods of 10,000 rupees along with the GST, 5% of the 500 rupees, it comes to 500 rupees. The same goods which has been paid the supplier, the same goods, Mr. A want to sell the 16,000. Means he make the whatever 10,000 he procured and 16. So he has to pay to the government. So he's already he had procured some material, he has purchased some goods. Purchase goods and he has availed that 500 rupees is having some inputs. That 500 rupees adjusted in 500 rupees and whatever its output is there now, that is 800 rupees minus 500 rupees, it coming the 300 rupees he has to pay to the government. So this para, it comes to suppose the same goods. Suppose he procured some goods to the from local purchase like intrastate or interstate, and he export the goods to the out of the country. So if going to the out of country, so goods are sold to the out of country, then it's a zero rated of taxes. There is no need to pay any taxes to the government. That is a zero rated of taxes. So whatever inputs is while it is procuring the goods, like that 10,000 into 5%, it's coming the 500 rupees. Now that 500 rupees can claim to the, we can claim for refund. That is the main. So how we are getting the inputs? It's a through inputs only. The inputs, whatever ITC has, we have aware that whatever that amounts having the in credit ledger, that amount we can claim for refund. That is main subject, main it's a refund. How it is coming, we are going to export the goods or the same goods are export to the, we can do the SCZ supplies. Or therein, suppose my goods are 18% of inverted goods are in incoming goods are it's 18%, and whereas my output is come to after manufacturing, it comes to only 5% that it comes to inverted duty. That also will explain that to each and every line. Then this is the basic effect of the input tax credit. So that it comes to the whatever is there taxes eligible. He is not, suppose if he is not having customer, so that paying of the GST in the government, he will pay 300 rupees. He was able to pay less only because he was able to avail the benefit of the input tax credit 500 rupees. He is availed. If he is not eligible to avail the credit, he would simply the paying the entire amount 800 rupees to the government. Why it is the entire amount to the 800 rupees? Suppose the 500 rupees, that 500 rupees, suppose ineligible item, then he has to pay the 800 rupees to the directly the government. So main conditions of that ITC, coming to the main ITC, there are certain conditions. First one, goods and services brought should only be used in furtherance of business. This is very important. Furtherance of business. Why it is furtherance of business? The word is a furtherance. If you do business, then only you are eligible for ITC. The purpose that means availed for the personal consumption, then ITC would not be. Suppose if you are procure some goods, partly if you are using for it's a business, partly for use it for personal consumption, so that we cannot eligible for ITC 100%. That we have to proportionate that whatever it's used in the goods into the business purpose, that we are eligible for ITC. There's the first point is the condition is that he has to do business and he is eligible for ITC. Buyer shall retain the such a tax invoice, debit note, other documents, evidence of. Suppose if any procurement is there, that he has to keep the invoice. That is the must and should document. If there's no invoice, we are not eligible for ITC. Such a tax invoice and debit note filed by the supplier to the buyers to be. Sir, we take the input of the 20 minutes, 25, then I go to the refund section, sir. This is very important. So before going the refund, this input tax also, it's a good chapter. So once you finish this and 25 minutes, then I go to refund.
Yeah.
Okay.
Okay.
Yes.
Not
Yes, sir.
take.
So third clause is the such a tax invoice and debit note and filed by the supplier in R1 and it appears in the buyer's GST. See, if you suppose we procure some material from the buyer or supplier, from the supplier, he has to file a return. He has to file a return supplier under GST R1, then that same is appears, the same is appears in buyer's 2B. Then only he is eligible for to claim the ITC, input tax credit, right? The goods or services have been delivered, buyer that delivered by the products and product, the buyer agent or someone representative or any other person directed to accordance with the document transforming the goods and constitutes receipt of the goods. See, not only tax, have a tax invoice, but movement of the goods also very important. He has to receive the goods, then only he eligible for ITC. Coming to the buyer must furnish the GST returns from TB. Suppose just we are taking the goods and supplier has filed the return R1, but the buyer also has to file the GST returns form 3B, then only he is eligible for ITC. If he not file the 3B, then he is not eligible for that. Clause number 7. When the goods are received in lots of the installments, ITC will be allowed to be availed when the last lot of the installments. See, suppose I have a different lots. Suppose if you procure the material in a different lots. See, last installment only for you have received the ITC. How it is comes lot in. So what is that lot installment? Suppose the heavy, we have procured the more huge raw material. Then that case, it's coming to the 10 trucks. Coming to the 10 trucks, then first truck, second truck, third truck, like that. Suppose the last truck, whatever last lot, once if you have received the last lot, then only we are eligible for ITC. First truck we have received, and second truck, third truck, but we have not received the invoice. But we are not received the material whole amount. Received the invoice, but we have not received the material in the whole total material. Then we are not eligible for first 3 to 4 trucks. You are eligible for after all the, if you have received the total lots of the installments, then only lots or installments, then only you are eligible for ITC. Coming to the clause number 8. The buyer must pay towards the supply of the goods and services within 180 days. This is very, very important. Simply we buy the goods and procure the goods. Supplier already has supplied the goods. We have all the documents, tax invoice, debit note, and e-way bill, everything is there. But the recipient has not paid the payment within the 180 days, then he has failed to claim the ITC. This is very, very important. Again, I tell you, this is very important, section 16(2) proviso. Once the recipient received the goods and received the invoice, received everything, all conditions are okay, but he has not failed to pay the amount, then that case also he is not eligible for ITC. This is 180 days clause. It's very, very important, students.
Sir, this clause is the most important clause, and you can explain the accountants. You see that accountants' job to follow up with the suppliers also. Am I correct?
Correct, sir.
They have to supply, follow up with the suppliers when that the supplier has paid the tax to the government or not. Otherwise, he is not eligible for the input. Am I correct,
sir? You are right.
So that
clause also is there, sir. That clause.
Next, yes. We look at stress chain point.
Correct, sir. So here it coming to the clause 10. If a depreciation has been claimed by on the tax portion of the capital goods purchase, no ITC. What is this clause? Suppose we make some capital goods, we produce some machinery. you procure some machinery, supplier has supplied the machinery installed, and the tax invoice say 1 lakh machinery, and there is a tax rate of 18%, it coming 18,000 rupees. Have to claim in ITC 18,000 rupees. Where it comes to the depreciation, we have to claim on depreciation on 1 lakh only. Why it is 1 lakh? 18,000 rupees we are claiming the ITC. So we have to claim depreciation in 1 lakh only. So the problem is that sometimes we are taking the entry of the plant and machinery 1,18,000 and party name is so and so, so and so, is so and so 1,18,000. We are claiming the double time, dual time, claiming in 1,18,000 on depreciation. Again, we are taking it's 18,000 in ITC. So this is also no, we cannot claim the ITC. What my book entry, how to take that plant and machinery in the 1 lakh and party name is 1,18,000. ITC, it comes to the 18,000. So 18,000, though we have to claim on depreciation on 1 lakh rupee only. This is very, but generally it's a mistake. It's a happening. It's a generally simply you're taking the 1,18,000 and taking the depreciation on that. That's not correct. We have to take on net amount, not on tax amount. So tax portion, whatever is there, that you take the ITC. So if you take the ITC on 1,18,000, including claiming the depreciation, then it comes to the, so ITC is not permitted for that. Coming to the input tax rate claimed by the before 30th. So what are the finance? What is the financial year? So 22-23 is the financial year. So what is the last date to claim the ITC? Suppose April 2022, March 23. So there is some whatever modifications, whatever is there and missing invoices. So suppose the supplier has not filed a return. And these are the things, whatever modifications, corrections, errors, whatever is there. So we can only claim it before 30th of November. This is November 2023 is a Finance Act 22 has implemented. And then 30th November 2023, the deadline, the last day to claim the whatever missing invoices, whatever is the missing credit, everything, whatever you have to claim, that is the deadline, 30th November. If the goods are lost, stolen, confiscated after the purchase, then ITC such inwards applies. Goods are not eligible for input tax credit. This is very important. See, something has happened, we procure the material, supplier has supplied the material, when something is lost, so stolen somewhere else, then that case ITC also is not eligible for this. So this ITC can claim if and it is used in the business purpose. Yes. See, suppose we have a separate section is there, section 17.5 is the blocked credit. This is a blocked credit. Suppose if we have, suppose say we have a business, we have procured some 2 laptops for purpose of the office, for the purpose of the personal, his son. Then that case, the GST number already have given to supplier, but GST number has given to supplier, he has given the tax invoice, and he supplied the material, everything is correct, the documentation part is correct. But thing is that material what we have used is their purpose of the personal only. Then that case, you are eligible only for 1 laptop for its personal consumption, that we are not eligible for ITC. Whatever is there in the personal using for the personal consumption, then what we have to, you have to reverse that ITC. You are not eligible for that. That section 17.5 speaks about the blocked credit, right? Motor vehicles, first contract service, food and beverages. So input and composite scheme. So these are the conditions we are not eligible for this, for ITC. So we can go, so the major, why it is coming to the ITC, the only for that to claim the inputs adjusted in our output tax, adjusted to our output tax. This is again, we are skipping this definition of the motor vehicles and grounds of the ITC of motor vehicles. We are not eligible for that. Just I come to this here, motor vehicles. Suppose we have a motor vehicle, sir, car is there. Car is for the purpose of the office only. Then you are not eligible for that motor vehicle. Purpose of that using for personal consumption. Speaks in section 17.5, it's for blocked credit. The same vehicle, suppose it's a transport vehicle. Coming to the transport vehicles, engaged for purpose of the business, then that case you are eligible for special purpose of the vehicles, being they used for factory or any enclosed that premises for movement of the goods from one place to one place, then we are eligible for ITC. So that vehicle for purpose of the only for that using for purpose of the business only. If that is just, we see that in transport vehicles, always the name board, the number plate, it of the manpower. For that case, we are eligible for ITC. So insurance. So this is very important, and insurance also, it's you are eligible for some certain cases. See, so suppose health and life insurance, you are not eligible for the general insurance like that. If you are insurance for goods or machinery or building, that eligible for ITC. And food and beverages, it's for the outdoor catering, it's in a blocked credit. We are not eligible for that. Beauty treatment, it's not eligible. And ITC level GST paid and insurance, in certain cases, you are eligible. And the works contracts, this is very important. The works contract service was supplied for construction of the immovable property. So if you construct the factory, building, working land, constructing the building, then that case you are not eligible for ITC. In similar lines, if you install the plant and machinery, then you are eligible for ITC. Why it is machinery? It's produce some output. Then that case you are machinery, whether it comes to the capital goods, eligible for ITC. So we are making the furtherance of business. We are using that plant and machinery for furtherance of business. Then that case you are eligible for the goods or service. The availed of input and inputs are used for construction, the immovable property. Goods and services are received by taxable person. Construction of the immovable property is a own account, including the one such goods or services used in the course of furtherance of business are not allowed to claiming the ITC. However, credit is allowed if they are used in the construction of the plant and machinery. That's very clear. The installation of the plant and machinery, you are eligible for that ITC. So plant and machinery means apparatus, equipment, machinery, fixed earth by foundation, structural support used for making of the outward supply. That is important. Plant and machinery making outward supply of the goods and services are both include such a foundation of the structural supports, but excludes land and building, telecommunication towers, pipeline towers. These are all exclusive. We cannot claim the ITC. ITC on works contract services availed in software company for construction, its office is blocked, right? Composition scheme, of course, we are not eligible for that. Okay. Then it is just I am explaining the ITC. The purpose of that refund. Okay. Coming to now, I am going to the refund section. So students, just I am telling the why we have taken in the ITC chapter, the purpose of that refund. Whenever if we have a ITC is there is no output or there is no output is a zero rated, then whatever accumulated ITC is there, then we are eligible for ITC for claiming of the refund. For that purpose only have just taken it's at 15-20 minutes for the ITC class. Okay. So now taking off input. In certain cases, only for section, every registered person, again, I am telling you, section 61 speaks only input tax credit, registered person entitled to take the credit input tax charged in supply of the goods and services, which is used to intend to be used, that the word is intend to be used, the course of further business. If they are not using for the personal business, he is not eligible for ITC. This is a very, very important section 61, right? And now we're coming to the refund section. So already we have some procured some material, and suppose if you have procured some material, supply the material, we have some outputs, have inputs like that. Inputs can use for furtherance of business, furtherance of our output tax, whatever adjustments. Now it's a refund. How to claim the refund? How to claim the refund? What today's topic is that how to claim the refund in GST. Generally, refund is the relevant to sections are section 54 to 58, and relevant rules are 89 to 97. Relevant forms are refund 01 to RFD 01. So refund means RFD in short form, RFD 01 to RFD 11. Section speaks section 54 to 58. Rules speaks section 89 to 97. Right. Then I'm going to directly practice tips. This is for student tips. Generally refund time of the 2 years. So how what generally suppose say if at 22 suppose 22 April we have some refunds like that, we have some inverts inputs are there. Then what is the limit for to claim the time limit is 2 years. So April 22 we have procured the material, we have a excess accumulated ITC. Then what the time limit is that 2 years. So April 23, 24. So it comes to 24 April till time limit is 24th April. After that, we cannot claim the refund. That is a fundamental rule of the time limit of the 2 years of the refund, claiming of the refund. The relevant date, that means it speaks about the 2 years. So that is 2 years. The claim of refund relating to balance of electronic cash ledger. Why? What is this? Again, what is? So now we have to come to this. We have in login, if you go for this in portal, in the GST and network, we have a 3 type of ledgers. One, it is comes to the electronic cash ledger, electronic credit ledger, electronic liability ledger. What's cash ledger? How it is comes to cash ledger? So suppose say if you are doing some services to the government works, like that works contract service, constructing the buildings, constructing some commercial constructions, to the railway works, to the some other government works, any state government or central government, whatever. Then they deduct some amount to the TDS, like income tax TDS, how they deduct. Similarly, there is some deduction of the TDS, GST TDS. That amount, whatever TDS, it comes to the electronic cash ledger. The TDS, suppose if we have a high inputs, we are adjusted, whatever output is adjusted there in our regular inputs, adjusted in our output, then the cash ledger, whatever is there in accumulated cash ledger is there in electronic cash ledger, that we can claim that amount also, that refund. So there is no limit for that. Only the limit of the 2 years is only for regular inputs, whereas in the electronic cash ledger payment, whatever is there, then there's no time limit. We can claim anytime. That is very, very important. Any amount after adjusting the tax payable of the casual taxable person, non-resident taxable, the person out of the advance tax deposit. Suppose say, now you know that its exhibition is going on in Nampally. Suppose a casual taxable person, he has taken some registration. He paid some deposit to the government. After 45 days or 60 days, suppose he don't have any sales, but he already has paid some deposit to the government. Then he has, there's no sales of the last. So whatever deposit is having with the government, then he has to claim that refund. That procedure also some prescribed in the refund section. That is a, okay. Next, refund of unutilized input credit would be allowed in the case of the zero rated supply. That is very important. Zero rated supply, I will explain that. Exports. I will explain the elaborate. That's very important. Where the credit has accumulated on account of the rate of tax, inputs being the higher than the rate of tax output supply. This is very, very important tip. See, coming to this class B, the input credit accumulated in cash. Suppose, for example, say I have given one example, 10,000 rupees. My input turnout, there is a tax rate is 18%. So it coming 1800, 10,000 into 18%, it coming 1800 rupees. Then my outputs are that whatever I am processing or manufacturing, whatever is there, my output, it coming to the only 12% or 5%. Then what is the gap? 1800 rupees already have paid, 1800 rupees that have output is coming to the, say that it's 1200 rupees or 500 rupees. In that case, what a difference, the gap, we can claim the refund. That is called inverted duty. Accumulated I contra higher than, that is called inverted duty. That is called class B speaks credit has been accumulated on account of the rate of tax, inputs being the higher than the rate of tax, output supplies. Then that case also we can claim refund. First class A, it speaks zero rated supplies, that is exports made without payment of the tax, without the pay. That is also exports. Suppose say all inputs are coming to the whatever domestic purchase inwards, like interstate inwards, intrastate inwards, or accumulated whatever is there in ITC, then we are eligible for refund. This is very important, zero rated supplies exports. And then coming to refund under inverted duty, that is the inverted duty structure is not allowable in respect of the goods notified in the notification. It's so and so notification, and integrated also. It's a, so before that we have to general information to you. Suppose notification speaks about the three types. One is CT. CT speaks always in central tax. It speaks about the administration, the act and rules. CTR speaks about all the notifications rates. That is speaks about the rates, tax rates. If any changes there in CTR and CTR, then automatically through notifications only government published. See, CTR, the rate, suppose say it's today, earlier in 2017, so many goods or so many items are in the 12% and 18%. Then through notification, they have through notification, they have come down to the 5%, 12%. So through notifications only, whatever changes through notification, any rate of taxes or whatever. CT speaks about only changes in the act and rules. CTR speaks about the only goods, rates and taxes, right? Next, refund of unutilized ITC allowed where the goods are exported out of India subject to export duty. Suppose this, where the supplies of goods and services both avails in drawback in respect of the central tax, claims refund, integrated tax paid on such a supplies. This is what is this, sir, again. So this is students is coming for this. If you have whatever unutilized input shall not be allowed. It's not allowed. Why? Already they have claimed the benefits of the true export duty and duty backs. Already claimed the benefit. Then there is no, we are not eligible for this unutilized ITC. No, already they have claimed. So that case we are not eligible for refund. Then refund of unutilized ITC shall not be allowed in case of service by of construction of the complex, building, civil structure. Yes, this is very, very important. See, there is a through notification for any residential complex. So that particular area of the services, he is not eligible for ITC. So why it is that they were going for composition scheme, they pay only 1% or 5%, 1% or 5%. Again, what is this, sir? What is this? Again, it's a 1 and 5. It's a 1% for affordable, 5% is unaffordable. So that means that cases that charges are coming to the 1%, 5%. That it's a big subject that one day will definitely take for works contract service in residential building. It's that's it takes maximum 1.5 to 2 hours. That also will explain next class if you have time sufficient. Then coming to the where the amount of claimed as a refund is less than 2 lakhs, it shall not be necessarily for the application. The fund is the documentary and other evidence of the may file the declaration based on the documentary and other evidence, and incidence of such a tax interest had not been possible. So there is no 1,000 rupees. There is no the refund order required to be. Now this is very important. If you apply that also, I come to that. If you file the application, then maximum time limit to claim the refund, the government has to process that within 60 days. This is a very, very important. Refund order is required to be issued within the 60 days from the date of receipt of the application. Today we have applied for our RFD 01. Then within 16 days, it has to issue the refund amount. When the proper officer satisfied the whole and part of the amount claimed the refund is refundable, he may make the order accordingly. Prescribed order, and there is a section 54.8. The prescribed, there is a procedure is there. Accordingly, they prepare the order and issue the order through everything. Now I'm telling application, everything is through online only. There is no manual. The refund also, it comes to directly to the bank only. If any corrections are there, suppose if your refund application is there, something is wrong, if whatever we claimed is wrong, then they give the some, again it's a some show cause notice. Again, that show cause notice, we have to give the reply. They give the order again. So that procedure also is there. This is the tips only. Then coming to the next slides are coming to the explain the each and every clause. Where the refund is to due to registered taxable person who has defaulted furnishing any return. So this is very important coming to this. Suppose if we have accumulated ITC, Why, how it is come the accumulated is your goods are procuring continuously and there is no output, then the whatever accumulated ITC, so we at the end of the some period, we claim the refund. Reason we have to explain that we have a huge stocks, but there is no manufacturing. That cases also we have to explain why you are having the good huge stocks, why you are not manufacturing. That also we have to give the reasons particularly. So then only we are eligible for ITC refund. The amount of this is class why the refund of registered person by the defaulted funding there. Before that, to claim the refund, he has to file all the whatever pending interest or any demands or whatever interest penalty, everything has to clear. He has to pay, then only is eligible for refund. Otherwise, what happened? See, whatever refund if you have, he adjusted there, whatever you will have a demand or interest or penalty. He adjusted remaining balance will release the payments. Amount of advance tax deposited casual. Already I have discussed casual taxable person. Whatever advance paid to the government, then he claim after that if there is no output supplies. Coming to no refund shall be paid the applicant if the amount is less than 1,000. I told you already, I clear. If less than 1,000 rupees, there is no refund. We cannot apply also. If suppose your application has filed proper officer, now he has to speak the proper officer here in GST. So defined by proper officer also. Section, so within the 60 days, if he has not received the application and he has not entitled to, he is not paid the refund, then government itself has to pay 6% of the interest, the total refund amount. So this clearly mentioned 6% in respect of the refund from the date immediately after the expiry of the due date. This is very important. So the next why the claim of refund arises in the order passed by the adjudicating. This is very important. There is a one thing we have claimed zero rated supplies, but duty supplies. Now it comes to the have suppose say do you have any litigation? It's open. Then that case we have challenged the case, and then that case whatever I have paid the admit tax, whatever amount I have paid in 10%, then I have to claim that amount after order has been passed by the authority or tribunal or any courts has given some directions, whatever application is admitted and whatever amount, it's a in that case has to be favored to me, then whatever amount I have paid to the government, that amount to claim through refund only, then with interest only, with interest also. Right. Virtue of the notification, the canteen department, this is very important. CSD departments, there were also it's entitled to claim the refund 50% the application central tax paid and the inward supplies. CSD canteens go, it's a military departments. So then if they were taking some whatever inputs they have accordingly, they were eligible for ITC, whatever they having. Right. Para number 4 in section. This is very important circular. I cannot go for deep. So very 125 circulars, always the circulars speaks of the clarifications. Each and every, whatever any doubts, questions, we have someone's notifications issued by the government. What happened? So some the notification is not clear or not understandable. Then what that case, what circulars through circular or to press release, some clarifications go with the government to GST committee. So and so clarification how to file the application. What are these are the questions and answers like that. Okay, they give some clarifications. The modalities shall be followed by refund application, GST RFD 0. These are modalities. This is a very, very, very important circular. Then after that, so many changes it comes. The first 1811-2009 circular has this. If you go for circular now, then how to file the common portal. This what are the RFD 01, 02, 03, 04, how to this, all these things that it coming the explanation of this through circular that I will explain the next slides. So already we have discussed the tips. Now it's a situation which may give the rise to refund and what circumstances we have to claim. So first claim is export of goods and services on payment of tax. Export of goods and services on payment of tax. That is one. Payment of tax is different, without payment of the tax different. What is the payment of tax? So if you export the goods with the payment, we make the payment and to claim the immediately from government. This is very important. Supply of the goods and services, SEZ units. SEZ is the special economic zones And this almost all these units are developers and payment. It's some zones are uh, like that. It's an export zone. These are also specially economic zones, or there is a separate commissionerates, and that units is almost all it comes under export zone only. So this supply of goods services to SEZ units and developers and payment of the tax. This also comes, we are eligible for refund. So before that refund, just already have explained to ITC, that is accumulated ITC. When we get the accumulated ITC, if any businessman to procure the goods or any material, he's paid the taxes to the department or supplier, that whatever amount is there in our displaying in our 2B column, that whatever the 2B column is there, that is called the inputs. That if we have export the goods to through zero rated, then whatever accumulated ITC is there now, that we have to claim through refund under GST Act. So this is export of goods service payment, first column, and supply of goods and services SEZ units to developer, and export of the goods and services under bond and LUT. This is a special LUT without payment of tax. We have to apply for this LUT every year, and then before 30th April, then we are LUT, that if you have LUT number, then without the payment of tax, then whatever accumulated ITC, whatever is there, then he is eligible for that refund. Coming to the fourth, supply of the goods and services of SEZ units, developers, and without payment of tax. First one is the with payment. Second one is the fourth, the third and fourth is the with payment. Both are exporting the goods to the out of country, and SEZ also equivalent to out of country only. That is also SEZ with payment, without payment. Right? With payment, whatever paid the taxes, and immediately we can claim automatically. Similarly, it's a SEZ units without payment also we can eligible for refund. Next, deemed exports. Refund available to both the suppliers and recipients. These are deemed exports that we will explain. Deemed exports also. So deemed exports also is part of the exports of the goods. See, it's the mediators only. Deemed exports also mediators. The refund of taxes are purchase made the UN agencies and embassies. The refund arising the judgment. Already I told you judgment, decrease, and whatever directions of the applicant as per the directions you are eligible for. Whatever it's a pay to the through admit tax, and then you are eligible for that. So judgment is in coming to the in favor to us. Then whatever amount we have paid the admit tax, that amount eligible for refund. Refund of the accumulated input tax at the account of the inverted duty structure. That already I told you. I said inverted duty, when it comes, my inverts are higher than the outputs, So my invert is 18% of the tax, my output is only 12%, then 6%, whatever gap is there, then we are eligible for refund. Finalization of the provisional assessments, excess balance and cash ledger, already have explained where how to comes the cash ledger. Coming to the excess payment of tax. So by mistake, we have paid the excess payment of tax. Then we can, after that, we identify that, you know that I have paid the excess payment. Then we are eligible for to claim the refund. Coming to the refunds of international tourists. What is this international tourist? See, some international tourist came to Hyderabad. He want to procure some pearls. He visited in the Charminar, and he buys some pearls and gold or whatever. It's a local. Whatever amount he has paid to the department, paid to the supplier. That whatever that amount, whatever is, they can claim at their customer front end. He's going out to again. He going back to the his country, then he is eligible for that whatever amount. There is special counter there is the customs there in airports. Then you go, you show it there in invoice copy, he check it there, and then automatically we get the refund his bank account. Right? This is in refunds of international tourists. GST paid on goods in India and carried abroad the time of their departure of from India. So while it's a departure, then is eligible. Is eligible for refund. Refund an account of the tax paid or supplier which is not provided either in wholly or partly in such invoice has not been issued advance payment. Refund on account of the tax. See what happened this 13. See, I have done, I have taken some contract works from XYZ company. So what happened, I have taken some contract works. He has paid some amount, advance amount. So say 1 lakh rupee. have whatever advances received into services, I have to immediately have to report there in my returns. Have paid 1 lakh rupee into 12%, 18%, say 18,000 I have paid to the department. And then after in due course, what happened that the agreement has been cancelled. Already I have paid the 18,000 rupees to the department and filed the return, paid the taxes. Then what happened? In due course, what happened? The agreement has been cancelled. Then that cases also, we are eligible for to take the refunds. So refund on account of the paid and surplus which not provided either in wholly or partly, that which has not been issued, and then in that cases advance payment whatever I have paid, then you are eligible to take the refund. Refund of the CGST and CGST paid treating as a supply of the intrastate supply of the which is subsequently held that intrastate supply of the vice versa. So what happened? Initially, it's a CGST, GST paid by treating the intrastate supply, which is subsequently it's held that interstate. What is difference about the intrastate and interstate? Interstate means the out of the Telangana. Intrastate means within the Telangana. That it comes to intrastate and the domestic sales. Interstate means out of this house station in the VAT Act. Refund in GST candidates already have discussed. These are the list is indicated the basically it's a 15 major refunds is coming. Export of goods with payment, supplies the goods to SEZ area and with payment and without payment, deemed exports and UN agencies and embassies, and through judgments favor to the recipient or favor to the businessman, then you are eligible for refund. And input tax credit account, inverted duty already have discussed. Finalization of profile assessment, balance of cash ledger when it comes to cash ledger while through he am giving the some services to the government works, then the treasury whatever it's he has paid some amount to the TDS amount in coming to my cash ledger. Before how the TDS, see in the Income Tax Act, you give the PAN number to the contractee. Similarly, my GST number you have to give to the contractee, the government department. Then whatever amount we have deducting on my account, that amount it comes to the cash ledger, electronic cash ledger. Right, that cash ledger if you have used with your output tax, it's okay. If not used, you are used in this output tax with the regular inputs, then it's whatever accumulated cash we can claim to refund. Next, conditions to taking the input tax. This is already explained. It's input tax credit. The main condition is to that. Suppose he has to goods and services. I told very clear. It's a tax invoice is very important, and invoice or debit note. Right. Next, he must both the but supplier and recipient both has to file the returns. Goods movement is important. And payment is section 180 days clause is very important. What is 180 days? Already I told very clear. 180 days. See, if any material received from the supplier, then within the 180 days, we have to pay to the supplier. Then only we are eligible for ITC. What happened if you are not paid? What happened for that? Again, we have to reverse that whatever claimed ITC to our output tax, to output liability, and then you claim again. That's why it's a very, very caution about the businessman. If anything is there in whatever procurement, whatever material inwards, whatever is there, he has to, once if the book entry, you have to check age-wise analysis within 90 days or 60 days, 180 days, or like that. If he within 180 days, he has to return to the, he has to pay the taxes. So section is received the goods B and 16.2A, it coming to the invoice and debit note. Details of 16.2BA, and this is very important. E class, tax charge in the respect of the supply has been actually paid to the account appropriate government, either cash or through utilization of ITC admissible for respect of the said supply, section 16.2C. And F, he has to furnish the section 39. 39 means the returns. Section 39 means returns. The scope above conditions, he has to discuss the follows, right? Important terms of the defined ITC. It's not important for this, already we have discussed. And this capital goods, right? This also have completed. Next. In certain cases, no refund of the unutilized ITC in following cases. So already in the practice tips I have explained. If the supplier avails the drawback in respect of the central tax and claim refund integrated tax paid on such a supply. So already has that, then that is he cannot no refund. So already he has claimed duty drawback. Then only that cases he has not eligible for refund. Supply of services, construction of the complex building, civil structure, that case also he has not eligible for refund. The government has notified various goods and services in respect of which no refund. The specified goods is not claimed for refund. The person claiming the refund at section 77, the pay taxes him in respect of any transaction considered of intrastate and subsequently had that interstate that expired of the period of 2 years. Then if after 2 years, then he has forgot about this, all this, then what happened? He has not eligible for that. So time limit is the 2 years. Then after that, we can eligible for ITC. The same. Refund of any advance tax deposited shall be claimed and casual taxable person. The last return required to be furnished after adjusting the tax payable, the advance tax deposited at the time of the registration. As he forget the casual table, he चले गया, but इधर से नामपल्ली से exhibition में हो गया, return file हो गया, but he has not filed the refund application. After 2 years, he cannot eligible for this. Time limit is only 2 years. Coming to this. Okay, sir, now it's everything is okay. First, we have discussed about the ITC. When it comes to the ITC, only for procuring the material. Then accumulated ITC or zero rated of supplies and whatever is there, then it comes to eligible for refund. ITC only for procuring of the materials. Number two, the refund section. Refund, when we eligible for refund, if you have export the goods without payment or with payment, or supplies the goods to the SCZ and with payment, without payment, and CSD canteens, there is a 15 items are there. No? That is the things are there, that accordingly 15. Accordingly, the adjudicating and something after that, we got the orders and then circumstances. Okay, refund is so and so circumstance, we are eligible for this. Coming to this, refund, what are the documents required? Okay, RFD 01, GST, what are the documents to required? So coming to this, reference number of the copy of the order. Suppose first column. So you have passed the order, tribunal or authority, some reference number he has given. Based on that reference number, we can eligible for ITC. That's everything. Now I told very clear, we're eligible of the refund through application through net only, online only. There is no manual application, nothing. They are not entertain any manual. Everything through online only. Payment made to the tax line. Statement containing the number and date of shipping bills. Suppose if you do some exports, shipping invoices, bill of exports, relevant export invoices, case with the refund in account of the export of goods and other than that. So sir, LXCT, why you have mentioned very here, export of goods only, other than LXCT, we are not eligible for ITC. We are not eligible for refund. Shipping bills, bill of exports documents, relevant export invoices mandatory file to claiming of the refund, zero rated supplies. Students, I am telling very clear. Now we are discussing about today, it's a refund. When the refund, it comes to only accumulated ITC. The accumulated ITC, how we get the ITC from the only for procuring of the material. We are doing the business. If whatever, if we have a, suppose if you are using for the material for the purpose of the business only. Again, I tell you very clear, the whatever material we procured for furtherance of business, intend to use the business only. Well, if you are not intend to, if you are not personal business, you are eligible, you are not eligible for to claim the ITC, as well as we cannot claim the refund also. Very clear. Next, statement of containing the number of the export invoices, details of energy exported, tariff, and this is the documents has to be to submit to the department. Coming this, in case of expenses, sir, how to calculate the export services? How to calculate? So this very important document, suppose say one pharma company is there, we have done some R&D, and then We have done some R&D through exports. The country is there in somewhere in another country has given some do this job बोल R&D कर दो इसका कैसा करना है इसको R&D करके so test कर दो नहीं तो इसका useful for human or animals. So these are the R&D करने के बाद then he has some raise the invoice to the exporter, importer like that foreign company. We generate some invoice. Okay, how to identify, how to evidence we have to give. So have I done everything here only, or it's in Indian only? Have done all the experiments have done here only. Then you have to raise the export invoice to give the export invoice to the foreigner. Then how to identify that this have done export bulk, how it is. So this is very important. We have to take the one order copy, service order copy from the foreign buyer, and secondly. We have to receipt from the foreign currency, foreign inward supplies. This is very important. And third one, we have to prove that we have to raise the invoice copy to the foreign buyer. This all the three documents is required. Then only that is eligible for, if whatever inputs are there in procurement in local, then eligible for ITC. Application has to submit the statement containing the number, date of invoice and invoice rules and endorsement. Similarly, same invoice number, it's mandatory to maintain the one statement and all this. In case supply of the services at SEZ and SEZ developer, statement containing the number of date and invoices, the evidence regarding the endorsement of the details of the payment, along with its proof made by the recipient to the supplier for authorized operations. It's authorized operations means the commissionerate. Suppose he have a supplier the material to the SEZ and SEZ developer. What is the difference with the SEZ and SEZ developer? SEZ is the units and SEZ developer. SEZ developer, he developing the SEZ area, and SEZ unit, the units has been to do the production, SEZ unit. The SEZ developer, he developed the SEZ area. Suppose if you supply the SEZ developer, on that case also, you are eligible for ITC. And refund also. So then coming to the next class, where the refund is an account of the supply made to the SEZ developer in declaration of this is the very important. What declarations, everything is undertaking and declaration has to provide to the department, then only you are eligible for refunds. That slides also is there. What declaration has to come? What declaration, that is also is there. I will explain that. So undertaking and declarations, that is prescribed format is there. We have to give to the department. These are the declaration, these are the undertakings, has to upload through online only, through electronic, only electronic, or no need of the manual copies. First, we have to apply to the department through online, RFD01 and related documents. Then we have to give the manual copy. If needed, the department asking for that, manual copies, then again we have to provide the manual copies also. Coming to the statement containing the number of date and invoice along with the other evidences. Applicant claiming of the refund in the ITC accumulated, and the rate of tax, higher rate of inputs and output other than the zero rated. Coming again, sir, what is zero rated? Again, I have to explain that we are not eligible for any inverted duty. Coming to the inverted duty, suppose my whatever output supply of the goods are exempted. Goods are exempted. Whatever inputs are there in coming the taxable inputs like 18%, 12%, 5%, that case also we are not eligible. The same exempted goods, then we have supplied to the exports, then you are eligible for refund. Again, I'm repeat that very is important. We are exempted. We have a notification through notifications of services. 2/2017 or 12/2017 of the services, 2/2017 of the goods. These two notifications specifically mentioned exempted goods and exempted services. These two notifications, suppose if you are not eligible for refunds, if you have that whatever goods are supplied within the area, within the India, then you are not eligible for any refunds. Whatever materials accumulated ITC, whatever is there, that we are not eligible for that. Again, the same thing, if you supplied that you have done exports exempted goods, then you are eligible for ITC. It's very clear. Exempted goods through notifications 2/2017 and 12/2017 services. If you're done in the domestic and within the area of the India, then you are not eligible for a refund. The same thing, if you are in out of country, out of India, then you are eligible for claiming of the refund. That's very, very important. Okay. Reference number, final assessment order and copy of this said refund, that is already reference. I told you very clear. Statement showing the transaction considered the intrastate supply. Subsequently, it's interstate. Then that case also we are eligible for refund. Next, last one is a certificate. Chartered accountant. Chartered accountant always, it's very important role in the GST. So cost accountant, if anything, it's a certified by certificates. Through specified certificate is there, through prescribed format is there. Through he has to take the signature. Now, it's a more than 2 lakhs. He has to take the signature, compulsory, mandatory. He has to certify that yes, he is eligible for this amount. It's certificate.
Sir, it
Yes,
is
sir.
to be certified by a qualified cost accountant. Am I
Yes, sir.
correct?
Yes, sir. Already have mentioned, sir. Correct. Cost accountant also.
A cost accountant.
Yes, sir. It's a mandatory, sir, about 2 lakhs. If less than 2 lakhs, it's not required.
Okay. Okay.
That's chartered accountant. So he's busy with this, all the certifications, chartered accountant. So every time you go to the department, that's yes, is certification, sir. Particularly in a refund section, we have to take the certification from the CA. Coming to the right. So following documents will have to be submitted. Once all these are the prescribed so and so, then once RFD 01 filed. So RFD 01 filed, what are the documents required? Statements, your statements of invoices, and if exports, statement of invoice and shipping bills and bill of entries, and your purchases, that is called Annexure B. What are that? All these documents you have to upload. Then automatically, once if you upload the RFD 01A, common file by common portal, then that comes to generate the AR1, ARN, the statement 3A of the RFD 01. 3A means it's the purchase only. It's a procurements. Statement 3 from RFD 01 and the printouts of the 2A. 2A means it's the whatever we have procured the material from the supplier, the 2A statements, and FIRC copies if export of services. So these are all the support documents. We have to keep in ready. And then you submit the one. Once if you department will ask all this, मेरे नहीं भाई मेरे को online में इतना दिख रहा नहीं, क्या करना है? मैं don't know. You get the documents, all the physical copies. Wants to verify all the physical copies of original tax invoice, and this that. Then we have to submit all these physical copies to the department. If he's satisfied, immediately they release the refund amount with 90%. And if not satisfied, they issue the show cause notice. So once if once issue the show cause notice, then we have to give the reply. Then if he satisfies our reply, then he release the funds 90%. Then after remaining balance 10% will the issue afterwards. Then so undertaking, this is undertaking a declaration, very important. The prescribed format also, that is also is there in slide. Undertaking a declaration prescribed for RFD 01 itself. There is a undertakings there. I show you that 1 minute. Actually, these are forms are there. Undertaking a declaration that undertaking is the means it's declarations. It means that if anything is wrong, declarations, if anything is wrong in my part and so on, so in future in due course, then you are liable to make the payment with interest and penalty, whatever is there. That is the declarations we have to give the department. Documents to be submitted along with the refund claim. So already copy a ARN number or that already have mentioned. The time limit of the claiming of the refund, it's 54(1) within the 2 years section. Refund of the balance of electronic collection, already I have explained. A refund of unutilized IT section 54(3). Only 2 circumstances we have to zero rated of supplies without payment and accumulated ITC with this in inverted duties. The accumulated account of the rate of tax inputs and being higher than that is accumulated, except the nil and rated. This is very important. Again, I am telling you students, except nil rated and fully exempt, these goods are not eligible for ITC. See, my outputs are, it's a very zero rated and nil rated. My inputs are inverts are the taxable, the packing material and some other goods, and all these are inputs are it's coming to the taxable goods. Whatever accumulated ITC, we are not able, we have to reversal that ITC. So once the same goods are the same nil rated and fully exempted goods exported, then that case you are eligible for ITC refund. Next, this I am just compared with the rule and sections. Section 54, application for claiming of the refund. So application 18, application of the refund of the tax and interest and penalty fees and any other amount. Section 89(1), rule 89(1). Next, 96, refund of integrated tax paid and goods and export out of India. So 96A, refund of the integrated tax paid and export of goods and service under the bond and LUT. So first one is the 96, it's our export of India with the payment to 96A without payment undertaking. So section 54(2), application for the specified agencies entitled to refund of the inward supplies. 95(1)(a), 2, application the refund tax on certain persons. So this is just correlated with the rule and sections. So 54(4), documentary evidence accompanying the application, documentary evidence of establishing of the refund. So we have to establish you are eligible for refund. See, suppose say in a refund application we have filed all the documents through online, evidence supported. Then also they have a doubt about the proper officer. Then they call for that notice or through online only. That case we have to explain, then automatically we'll get the refund. 54(5), amount refundable on the credit in the consumer welfare fund or order sanctioning refund, credit of the amount of rejected refund claim. Suppose here we refund is applied, very good. Okay, my refund is a 1 lakh, I have filed the 2 lakhs. But whereas in your demand is there in 3 lakhs. There in any order, it's already is the pending with the department. Then that case, what happened? So before issuing the refund, the taxpayer is having any demands or any penalties, any dues are there. Then in that case, the proper officer to adjust my refund, the first whatever demand is having to the department, then he adjusted and remaining balance to release the refund. That is before issuing the provisional and all this, mandated to check the if he's having any demands and dues, then adjusted, then after only they release the payments. Refund not allowed in next substance. So these are the just comparison table. This is a section 92, order withholding the refund by commissioner. The commissioner having a powers to withhold. See, some any circumstances the taxpayer is having any dues. Okay. Then refund of tax in the acknowledgement. First they issue the acknowledgement within 7 days. First apply the application RFD01. Immediately they issue the this one acknowledgement, and then after they verify the records improperly is there. Immediately they release the 90%. Then everything is and then the remaining balance 10% they release. Next, this is the
Excuse me, sir. Can you just check your time? You do.
Yes, sir. It's only a few minutes, only 2 minutes left,
Okay.
sir.
Okay.
We close
Thank
it, sir.
you.
Okay.
Thank you.
Right, sir. Correspondence of the forms. This is a very important RFD 01, RFD 02, 03, 04, 05, 06, 07. What is this? So related to, it's relating to section and rule. Already we have compared there in a section and rule. Now it's a form with rule and section and particulars. RFD 01, Annexure 1, Annexure 2, application of the refund. RFD 02, it comes to the acknowledgement. RFD 03, section 54 speaks rule 89(4), deficiency memo. Suppose if you have any, your application is any deficiency, they issue the deficiency memo. Then RFD 04, provisional refund order. If you have a provisional 90%, they release very immediately. So if you don't have any deficiency, within 7 days, the provisional refund will release. RFD 05, 91 to 91.3, 92.4, and RFD 06, refund of the sanction and rejection order. If 06, if they have any sanction, there is no deficiency, then automatically sanction. If we have any deficiency in memo, or if we have any application itself a wrong file, then rejection order. And 07, it comes to order of complete adjustment of the sanction refund. See, there is any demand, they adjusted in our refund. Coming to the RFD 08, notice for rejection of the application of the refund. 09 for reply of the show cause notice. Already I told that. 010 application of the refund. Okay. And 011 furnishing the bond and LLB to export of goods and services. This RFD GST at 3 is the monthly return. Now this is the steps to go to the refund. First, we have to go for refund pre-application. We have to give the details of the our GST number, nature of the business, and value of exports and income tax paid, and general details has to give them. And then coming to the step two, refund excess balance of the electronic cash ledger. These are columns are there. We have to select that exports of the goods without payment, with the payment, supplies to the SEZ with the payment, without payment, or there is an wrongly claimed in intrastate payments, wrongly interstate. Similarly, the options are there. Accordingly, we have to opt for that. Coming to the step 2, application of the refund, and select the year. Within 2 years only, we have to take the financial year and a month, which from if previous years there is no claiming, then we have to file the nil return. So last 2 years we can claim. The time limit is only 2 years. So if you have a cash balance, electronic cash balance, we have to select the how much amount is the cash bill accordingly integrated in CGST or SGST. Similarly, refund claimed, we have to mention, edited all the other things. And excess tax paid through GST or 3B, whatever amount 3B, whatever excess payment, that's it's accumulated ITC due to export of goods service without payment of tax. These are the forms, statements of 3 Rule 89-200. These are the forms, purchase particulars and all this we have to submit through online only to submit and upload that. Okay. And just this is a very important formula, sir. How to go for this automatically? We have to give this message 0 rated of sales. Adjusted total turnover. Adjusted total turnover. Again, there is a section 2(1)(1)(2). It comes to intrastate, interstate zeros. There is some specified formula is there that accordingly we have to take that calculations. And coming to the statement of the upload and all this, it's automatically portal. It's showing like that only. We have to feed all this bugger, and finally refund of to be claimed of this much amount. You are eligible for this. Okay, automatically these all the figures it coming out. Statement 5. These are the this everything. It's whatever the statement prescribed with the through online only. The specified format. Just we have to feed all these figures, and then we have to upload this. Thank you, sir. Thank you very much, Prakash Garu, for giving opportunity to explain this refund. But we have to take some little time, on 1.5 to 2 hours. We can explain elaborately, sir. Thank you, sir. Prakash Garu, thank you.
Yes, sir. Yes, sir. Yes, sir. Yes, sir. 1 minute. 1 minute. See, sir, one thing. Sir, you've given a, you see, one thing is that, you see, mostly I want to explain to all the students, you would have gone through these things. Some of you may be getting it. It is a too technical, and then is this so much subject is involved practically so many sections. There's a reason we want you to expose it to practicality, the tax advocates. This sort of meetings normally in our conferences, they charge only 45 minutes meeting is the maximum. Am I correct, Andy?
Yes, sir. You are right. Yes, sir.
So 45 minutes, actually in the day, they will be having only 4 sessions. That we pay so many thousands, 10,000 or 15,000 for the conferences. That's the reason indirectly it is a conference subject for you with elaborative, with a good presentation. We all have to thank actually Narasimha Garu is taking so much of pain, and he made so much of a presentation. It will make you as a good tax practitioner. Since our course is a practical course, we want to make it as a expose you to practicality of the subject. It's not a theory. It's all a practical part of it. Please let us all give him a big hand. All of you open up the mics and thank him. Clap hands.
Thank you, sir. Thank you so
Please
much.
give him a big hand. All of us.
Thank you, sir.
So we will have some more sessions from him. Okay. He's showing so Okay, he's taking so much of pains to make this. We are really thankful to him and fortunate. Okay, thank you, one and all. Sir,
Thank you,
thanks
sir.
a lot, and
Thanks, sir. Thank you very much.
thank you, sir. Thank you.
Right, sir. Okay, we can leave, sir.
Yeah.